wanted to talk about why levels matter more than price action. So this is Apple this morning. Apple is moving up in the pre-market, and it's been in a daily downtrend, a pretty strong one. Yesterday held on for the first time, and this morning it does this move up. And if you're sitting here zoomed in on the 1 or 2 minute time frame and you are watching these candles form, you see it had a sharp move up, set a high, move down, potential higher low, starts to move up again. So you're like, oh, this is bullish. And then boom, sets a lower high, starts to move down and down further, and broke down through the open and starts moving lower. So, if you're looking at this on like a screen like I did this morning, I'm going to talk about the mistake I made. So looking at this on the screen, and there's a lot of other things going on. And at the time that this was happening, Qs were going down. There was weakness. Tesla had lost the low of yesterday. And there was, a few bearish signals going on here. And you see this like start to form a 2 minute downtrend. And so you disregard it. Okay. Now, you could have been looking at this pre-market action here and said, oh, maybe there's some support in here. Maybe this is actually a good buy. But I generally don't buy against pre-market action because it doesn't really have any volume to support it. This doesn't really have as much value or like impact as a high volume area from regular trading hours. So I tend to kind of ignore the pre-market action a little bit when it comes to determining a trade. So what this is why levels matter is if I put the intraday levels on, and here they are, what you see is this purple line here is yesterday high of day, and you see in the pre-market it gapped up above the yesterday high of day, held them once, held them again, and then moved up. And as this is coming down here, what you need to be thinking coming into this is if it actually holds above yesterday high of day, or even if it tests it, that's bullish. And so this coming down here, even though it's a 2 minute downtrend, it's really actually just still developing the opening range on the morning. So it set a high, and now it's determining where's the low going to be. And if the low ends up being above the yesterday high of day, that is very bullish. If it tests yesterday high of day, that's also bullish. If it moves back in below yesterday high of day, that's less bullish. But there's a few different ways to play this. So how would you place a trade against this? Let's just see what happened first. So build out a few more candles. You see it sort of moving up, set a higher low again, up, way up. So okay, let me get rid of that now, and you'll see where it is. It's pulling in a little bit, but I'll just let this build out. My computer's a little sluggish right now. I'll get rid of some of this stuff just to clean up the chart a little bit. Get rid of that. Okay, so where would your trade be? So you could do this a few ways. One is you're waiting just to see how it reacts, and then based on the price action, you're going to place a trade. So let's say you're a price action pure trader, so you want to place it here on this candle, and you want to set your stops, somewhere below that yesterday high of day, and see what happens. And you can see from here, from where you entered, if this is one risk unit, you got basically, there's 1, 2, you got a 2-to-1 risk reward just on this first move up. And my bet is that right in here somewhere it's going to hold and continue higher, but we'll see. But that's a decent trade. Me, what I do is I think yesterday high of day is an incredibly important level. I place a lot more value on this level than most others. Yesterday high of day and yesterday low of day are super important because people in the daily time frame are watching. And so the fact that it didn't even touch it, that's super bullish. And I would have been buying if I had been thinking clearly and not just, it wasn't my focus today, so I was focused on a different trade. And so if I'd been looking at this and thinking about it, not just watching price action, then I would have thought, oh my God, testing yesterday high of day, you got to take a shot against that after it gapped up and held it here multiple times pre-market. and it already hit daily oversold. There's a good potential for a decent rally here, and so I would have been, as soon as it slowed coming into this area, I would have placed a position there, and my risk unit then is absolutely tiny, right? And so you can think about that, because you're not basing it on any proof of life, you're basing it purely on the level. Maybe you risk a little bit less, but your risk reward is so high, because if you basically, let me just draw a box here and we'll see what is this risk unit, how many risk units are we basically winning if this goes. So it's like 1, 2, 3, 4, 5, 6. You're at least 5 or 6 risk units just to get back to this high. It's probably like 4, and then if anything you get above that is bonus. And because it's an opening range play where you set a high, you're betting this is going to be the low. It's definitely going to come back and test the high at least, if not push through it. And you can see it did push through it, and now it's coming back and getting back into range. But I think it's going to get the bounce going here. And so your risk reward is just incredibly high when you base it against this level, instead of just trying to play the price action. And so I do these all the time, and I just risk a tiny portion of my day, which I didn't do here. And you can see I'm like slightly green on the day here, but nothing huge, because this would have been a huge win. The one that I did play, which I was focusing on in the morning, was NVIDIA, and I'll just show you the shot I took and failed at, which is kind of disappointing. I did a level burner. I call that a level burner, when you're basically looking at price action and playing it against a level. I'll just wait for this to load. Yeah, so on the morning, NVIDIA shot down off the open, and I took a shot in here. But you can see how wicky this was. It kept wobbling, and I ended up taking a profit somewhere right in here, where I got an entry somewhere down in here with a stop below there, and I barely made anything, 2.38%, before I just gave up on it stupidly instead of giving it some room to breathe, because my entry actually wasn't that awesome. I didn't get too close to the level, and I didn't like it, and so I took some profit too quickly and just got out of it, and here it went. This would have been a much bigger trade if I had just held on to it. But I hadn't been thinking of NVIDIA as a long. But again, the yesterday low of day, that's an important level. If it loses that level, it's a big deal. And so most of the time you're going to get a bounce there, even if it's just an initial bounce. And again, because this wasn't a yesterday high of day continuation trade, this was betting that the trend on NVIDIA on the daily is going to continue stair-stepping up. That's essentially what this trade is. I actually thought that the odds were kind of low. I didn't love my entry spot, and so when it waffled around, I got out of it. But here, lo and behold, it held. It has not been able to clear and hold above the halfway point of yesterday's range, so we might get an inside day today. But anyway, I digress. So I do these all the time. I'm always looking at these daily levels, and in my mind, they're more important than the price action. The price action is your guide in the short term for sure, but these matter so much that, if you're looking at that apple and thinking about the price action alone, what was your confidence that it was going to bounce in that spot? It was just like taking a shot in the dark. Like you don't know what's going to happen down here, based on some pre-market action. There's no volume on that stuff. Like you don't know what's going to happen here. Where do you take that trade? How do you know where to take that trade? It's got to be based on a key level. And holding yesterday high of day for continuation to the upside, that's a super, super key level. So something that I always remind myself every day is levels matter, levels matter, levels matter. Watch those levels from prior day and make trades against them, and you'll have a much higher likelihood of them working.